Welcome to the Explainer. Today, we're going to break down a really specific and, pretty aggressive system for growing a small trading account. Look, this is not about slow and steady wins. This is a high-stakes playbook designed for some seriously rapid growth. So let's just dive right in and see how it works. So, right out of the gate, the source material makes this huge claim, turning just $100 into over 1,000 in less than a month. That's a clean 10x. The big question, obviously, is how on earth is that even possible? Well, we're about to walk through the exact playbook step by step to see the thinking behind it. All right, so here's our game plan. First, we'll look at the challenge itself. Then, we're going to unpack 4 absolutely crucial rules that make the whole thing tick. After that, we'll get into 3 specific trading strategies, and then we'll tie it all together in the final playbook. Okay, so what is the secret sauce here? How can an account possibly grow that fast in such a short time? Is it just about getting lucky on a few trades, or is there an actual repeatable system at play? Well, according to the source, the strategies we're about to cover, they're only half the story. The success of this whole 10x challenge, it turns out, lives and dies by a super strict, non-negotiable code of conduct, a set of rules you have to follow, no exceptions. Okay, let's get into the engine room of this system. These are the 4 foundational rules that supposedly make that aggressive growth possible. And the source is crystal clear. If you skip this part, the strategies we're about to talk about, they just won't work. Rule number 1, it's all about the payoff. Every single trade you take has to have a minimum risk to reward ratio of 1 to 3. So to put it simply, if you risk $20 on a trade, your potential profit has to be at least $60. No ifs, ands, or buts. This is huge because it means one single win can wipe out 3 losses. Now, rule number 2 is where things get pretty wild. The system calls for risking a flat 20% of your entire account on every single trade. Yeah, I know. This is a super high-risk approach. It goes against all conventional wisdom, but this, right here, is the jet fuel for the rapid growth this system is aiming for. And that brings us to rule number 3. Compounding. What's so cool about this slide is you can see the exponential effect in action. So after your first win, your balance is $160. Now, for the next trade, you don't risk $20 again. Nope, you risk 20% of the new balance, which is $32. That means a win now gets you $96. And you can see how the account just starts to snowball. And the 4th and final rule is all about your timing, your battlefield, really. This system only works on what we'd call medium time frames, so anything between the 15-minute and the 4-hour charts. Anything higher is just too slow for that rapid compounding we just talked about, and anything lower, like a 1-minute chart, is just way too chaotic and noisy for these strategies. So, you see how this all locks together? It's a complete ecosystem. You've got that high reward target, which is fueled by some really aggressive risk, which is then amplified by compounding, all happening inside a very specific time frame. This framework is the absolute foundation you have to have in place before you even dream of placing a trade. All right, let's move on to our first strategy. This one is all about riding an existing trend, but the key here is to avoid chasing the price when it's taking off. Instead, the whole goal is to find a high-value entry point during a temporary pullback, a little dip. And the secret to finding these pullback zones is a concept called a fair value gap, or FVG for short. If you look at the slide, you can see it's this specific 3-candle pattern that creates a little imbalance, a gap, on the chart. And the theory is these gaps act like magnets, often pulling the price back to them before the trend decides to continue on its way. And what's great here is how this slide just lays it all out for us, a clear, repeatable recipe. First, you use a moving average to confirm which way the trend is going. Then, you spot a nice big FVG. Then you have to wait, patiently, for the price to pull back into that gap. Only then do you enter, and of course, you're aiming for that mandatory 1 to 3 reward. Next up, we've got a strategy that does the exact opposite. So instead of joining a trend that's already moving, this play is designed to catch a brand new one right as it's being born. And the key tool we're going to use to predict that change is trading volume. So this whole strategy relies on something called the volume oscillator indicator. Think of it this way. Volume basically measures the strength, the oomph, behind a price move. So if you see the price going up, but the volume is actually falling, that's a huge red flag that the trend is running out of gas, and a reversal could be right around the corner. What's so smart about this play is that it's a multi-step confirmation process. You don't just jump in on one signal. You wait for that first big spike in volume, then you watch for the volume to die down, which shows the trend is getting weak. And then, this is the critical part, you only enter when the price actually starts to reverse and you see the volume picking back up to support that new direction. Okay, our third and final play. This one focuses on one of the most classic patterns in trading, the trend line breakout. But there's a specific twist here, a little tweak that's designed to give you a much better entry and a much better risk-to-reward ratio. But first things first, this strategy only works with a valid trend line. And according to the source, this isn't just some random line you scribble on a chart. No, it has to connect a minimum of 3 distinct points. 3 highs if you're in a downtrend, or 3 lows in an uptrend. Anything less than 3, and it's not a valid setup for this play. Now, the absolute key here is patience. Step 3 is probably the most important part of this whole strategy. After you see a clear breakout, you do not chase the move. You wait. You wait for the price to come back and retest that old trend line that just broke. Entering on that retest, that's the magic moment that lets you set a tight stop loss and create that beautiful high-reward setup this system needs. So, we've gone through the 4 foundational rules, and we've walked through the 3 specific trading strategies. Let's zoom out now and see how all these pieces fit together to form one single, cohesive playbook. See, this isn't just a random collection of tips and tricks. It's a fully interconnected system. That aggressive 20% risk is only survivable because of the strict 1 to 3 risk-to-reward rule. The crazy growth is powered by compounding. And those 3 strategies, they're just the triggers, the specific moments you're allowed to deploy this risk model. The source is adamant, discipline isn't just important, it's literally everything. And that kind of brings us to our final thought. What this explainer has laid out is a precise, mechanical system for a very high-risk, high-reward game. It's a playbook that demands you to be a robot, to execute with extreme discipline. The path is clear, but the question it leaves you with is a personal one. Is that potential for insane growth worth the very significant risk involved? Well, that's a question every trader has to answer for themselves.